Broadcasting live from the Business RadioX studios in Atlanta, Georgia, it's time for On the Money, presented by Embassy National Bank.
Hi, everybody. This is Joe Moss, and welcome to this week's edition of On the Money, the #1 small business show on Business RadioX. On any given show, at as few as 80,000 listeners and as many as 400,000 listeners. So we're doing pretty good here on the Money.
After 3 months. Just want to clarify.
After 3 months.
Yeah, not the live show typically, but your podcast is very popular, yes.
And by the way, that was Mr. Mike Salmon, our producer. Welcome back from Rio.
I'm here, and if I start talking Portuguese, just remind me that I'm back home.
And how was it?
It was good. They worked really hard covering the games. To be honest with you, I think Brazil needed another 3 to 6 months to get ready for the games behind the scenes. But as far as all the events, everything went off. If you avoid the green water that the divers had to go into, everything seemed to go very smoothly.
And the mosquitoes?
Not an issue.
Not an issue.
Never.
Okay,
I knew it wasn't going to be.
Well, I got all over the professional golfers for wimping out of that, and hopefully they won't ever do it. But anyway, let's get on to the show. The show is presented by Embassy National Bank. We are a national chartered financial institution, and our deposits are insured by the FDIC. On this show, we discuss topics designed to help small business succeed, because at Embassy National Bank, we're proud of how we help small business. I'm Joe Moss, your host and president, Embassy National Bank. We welcome you to the Subaru of Gwinnett studio. Today, we're going to be talking about franchising, and we have an expert to help us through that topic, Mr. Steve Miller. Hey, Steve, how are you?
Doing well, Joe. Thanks for having me on the show this afternoon.
Steve is not the rock and roller, but that's okay. We want to talk about franchising today. So, Steve, talk about your company and your background.
My background is I came up through corporate America for the first 12 years of my career. I was in healthcare, so I worked for companies like Baxter Travenol, Adolph Coors Company, division of Norrell Healthcare here in Atlanta, and did well. In fact, the last 6 years of my career with 2 different companies, I was promoted 5 times, finally to a director level. And the things that I got both times was I got fired. They sold the divisions I was with both companies. So in 1992, I started up a company, medical product distribution company. I ran that for 8 years, and I sold that to a publicly traded company in 2000. And then I found a business that intrigued me. It was completely unrelated to anything I had done before, and it happened to be a franchise. Not in the traditional sense that you might think of fast food or retail, but restoration services for insurance companies. And bought the Atlanta market with a business partner in 2003. Ran that for 7 years with him. And then I sold my share to him about 6 years ago. And now I do consulting or coaching. I work with clients who are interested in going into a business of their own, franchise or otherwise. The company that I'm actually a franchisee of is called the Entrepreneur's Source. And I've been in business for 31 years. Mm-hmm. There's 100 coaches like me around the country. And we work with clients and advise them and guide them through a process of evaluating, first of all, whether business ownership is a good idea for them, and if so, which one.
And how do people typically get involved in a franchise?
Well, it's often by necessity, and it's often by trial and error. The necessity is, I think corporations today, and I experienced this in my career, they oftentimes view employees as more of a liability than an asset. And they oftentimes want to have a flexible workforce. So my experience was, we were sold twice, and they didn't need redundancy in the employment or the employees. So I lost my job. And I think that's happening oftentimes in corporate America. And roughly 35% of, quote, employees, unquote, are actually contractors. So employers are trying to maintain flexible workforces, and they're also trying to avoid paying benefits, mm-hmm. which are costly. So it has really affected greatly the workforce and the loyalty of not just the employer to the employee, but the employer to the employer. So there are a lot of people who are seeking something different. And that's where I come in. I give them oftentimes a plan B to a job. Mm-hmm. Or some of my clients who I've placed in businesses have jobs that they've retained, and they have this going, a business in addition to that, where they may devote 10 or 15 hours a week to it, which gives them a hedge potential income and a potential for building up equity in a business in addition to their jobs.
Well, we see franchising everywhere now. I deal with a lot of franchisees in the hotel business.
Sure.
And sometimes that's good, but it's also very controlling. And then on the lower scale, I don't know. There seems to be some people don't want to franchise. Other people want to join a franchise. So let's talk about the pluses for a minute.
Sure. I've owned two. And in my experience, there are 5 pluses and there are 2 negatives as I've seen them. One is the franchise is a proven business model. So the franchisor has not just through best practices and experience proven the model, but they've also recorded it. They've documented it. Part of what you purchase when you purchase a franchise and you pay a franchise fee is intellectual property. So that's that system. So think of it as a cookbook. I mean, my wife's an incredible cook, but if you ask me to go to the kitchen and create dinner, you show me everything I need to do it, I'm going to lock up. I don't know what ingredients to use, how much, how to cook it, how long to cook it, and so forth. So with a franchise, it's already been done. The recipe's already been baked, if you will, and with the right ingredients and the right times and so forth. To me, it's reassuring to know that someone's proved themselves before by doing it. So that's one of the biggest advantages. In addition to the documentation, they train the franchisees on how to implement that business plan. It's kind of the chef teaching how to cook the recipe.
Sure.
The fourth advantage is there's brand recognition. So those hotels you mentioned, Marriott, Comfort Inn, Comfort Suites.
They have the loyalty programs.
Exactly. And they have brand awareness. So when you're driving down the interstate and you see a Courtyard by Marriott, you're going to be comfortable and familiar with the brand and have a pretty good idea that it's going to be a quality experience for you. If it happens to be Steve's Motel, it may not be so great.
Right.
So there's some value to that. The last advantage that I see, that I think is probably the most overlooked, is the network of other owners. So as a coach, I acquired the franchise about 6 years ago. I spoke with other franchise owners, and one of the most successful coaches in terms of satisfaction of his clients and so forth was a guy named Bruce up in Chattanooga, Tennessee. So I went up and visited him, and I said, Bruce, I'm interested in doing this, but for me to move forward, I want someone to mentor me. I want to be mentored by the best. I want you to mentor me.
Now, he was a franchisee? Okay.
He was, and he had 7 years of experience before I joined the company, and he agreed to do that. It's a very collegial, fraternal experience when you're part of a franchise organization. You're in business, but you're not in business by yourself. So he mentored me. Well, for many years, Bruce was Franchisee of the Year with the Entrepreneur Source. Last year, I was the Franchisee of the Year because a lot had to do with Bruce's mentoring me. What I don't like is I have to sign a franchise agreement that was written by the attorney of the franchisor. And my experience was I've signed 2. They got put in a file drawer, and they won't be pulled out unless I get stupid or greedy until the 10-year renewal of my agreement when I have the option of renewing. So I understand the purpose of them. It's really to set the expectations of both parties of what's required of each. Some of them are written one-sided. There are 4,000 franchises, and some of them are indeed written one-sided. But my experience has been that mine have not been. And number 2, I don't like paying a royalty. It's like paying taxes. No one wants to pay taxes. However, with a royalty, I don't view it as a tax. I view it as an investment. So I can determine before I acquire the business whether that royalty is justified or not. And I can it's a voluntary tax. I can make the decision whether I sign the agreement, move forward with the franchise, and pay the royalties or not. But it's very transparent how I can determine that.
A lot of questions. Their franchises are regulated by the FTC. Is that correct?
The acquisition of the franchise is regulated by the Federal Trade Commission.
Okay.
So the FTC requires that before a franchisor can become a franchisor, they have to go through a background check.
Okay.
After they've gone through the background check, the FTC requires the franchisor from that point and every year thereafter to submit a franchise disclosure document, otherwise known as an FDD. The FDD has 23 items in it.
FDE.
FDD.
D, okay.
Franchise disclosure document. The FDD has 23 items that they're required to disclose. Some of the highlights of the 23 is, first is the background information on the franchisor themselves and their experience in the industry. The second is their most recently audited financial statements. It's important that before someone invests in a franchise, that they know that the company behind that is solid financially.
The franchisor.
The franchisor, exactly, is solid financially.
Audited financials.
Yes.
Okay.
A third aspect of it is a disclosure of any litigation that the franchisor is or has been involved with in the previous 3 years. The fourth item is the franchise agreement that one would end up signing has to be included in the FDD. And one of the most beneficial parts is at the back of the agreement, there's an addendum that lists all franchise owners, past and present, with name, address, and phone number.
Success and failure?
Yes.
Okay.
And
do they have to calculate a default rate?
They don't calculate a default rate, but they disclose those who are no longer active.
Okay.
And franchises are ultimately awarded, but there is a selling aspect that goes to them. So the representative of the franchise organization is going to steer oftentimes a prospective franchisee toward the franchisees that have been successful. But I advise my clients, okay, talk with them because you want to learn best practices and whether you can replicate those in your market.
Talk to the ones that failed.
But talk to some of the ones that may have failed and find out why. You might assume that they're going to say, well, the franchisor is a bum, they did nothing for me, and some feel that way. But a lot will either take the responsibility themselves or shared responsibility. It might be the business just isn't the right fit for them, and they don't understand that really until they get into it, and then they learn that. But just like any other business, if they get into it and they're not succeeding in it, they can sell it. It's not like they have to wait for 5 or 10 years.
So when you contact a franchisor, you should add, this is a publicly available document that they have to provide.
They do, and they have to know you cannot sign a franchise agreement for at least 14 days after one has received it.
Okay.
To give them really a chance to digest it, read it, understand it, potentially seek counsel to review it with them.
And obviously there are some good ones, and not so good ones. Give me some sources other than that franchise agreement that would compile the better franchises.
Well, there are a lot of websites out there that are aggregators, and they will list the top 10 franchises or the best potential franchises. There's no organization with little. There's a couple publications that attempt to rank them, like Forbes has one,
right.
Entrepreneur Magazine has one.
You want someone independent ranking it all, right?
Yes, but even sometimes those rankings they're overlooking options that may be viable for them. So I think that the most viable way is to do one's own diligence, but I coach, so I'm very objective about it. We represent about 180 franchise organizations.
Right.
There are 4,000 out there.
Wow.
And
I thought the number would be more than that.
4,000 options.
Okay.
There's between 4 and 5,000. I try to use the low end of it because I don't really. Even the International Franchise Association doesn't publish the exact number, but it's in that range. So you go to an aggregator website. I won't name names, but they're out there all over the place. And someone submits information to a franchisor for a franchise that they're interested in. Say it's a Comfort Inn or something like that. That information then goes to the franchisor, and they have typically limited staff who don't really have the ability to vet every application or every inquiry that comes in. Chick-fil-A, for example, 22,000 inquiries a year, and they award about 75 franchises. And of those 75 that they award, probably 2/3 are from people already inside the organization.
I was going to say they're very picky about who they award.
Absolutely.
And you really don't own that business. You actually have some type of a bonus, I think, based on performance.
You're an operator of a Chick-fil-A.
Yeah.
So it costs around about $10,000 for the operator's investment, so they do have some skin in the game. But all the build out, everything is done by Chick-fil-A.
Right.
And a friend of mine operates one near our home, and he's getting probably within 10 years of retirement. And I said, David, what happened? He said, put the keys on the counter and I walk. There's no equity in those. They potentially make a lot of money, but there's no equity. He has to save his money while he's operating from his income to be able to retire, unlike having an equity play.
All right. You're listening to Steve Miller. He is the president of the Entrepreneur Source here in Alpharetta, and we're talking about franchising, and Steve has been on both sides of the franchise and counsels people now on how to get involved in a franchise. We're having a real good conversation. Now, I do know that SBA has a default list out there. I don't know if the public can get a hold of that default list, but we as bankers use that, and it'll show us across all the various NAICS codes, which are industry codes, the default rate in terms of the various franchises, and it really helps us to find out which are the good ones and which aren't.
I would agree with that. I don't know whether that's available to the public or not. I know there are websites that have published that, but I don't know exactly where to obtain it if it is public. I would assume that it is.
Okay.
It's valuable information. The SBA Registry is public domain, and that lists the franchisors that are basically pre-approved for SBA loans. I think a lot of people think it's a very difficult task to get an SBA loan. And for an independent business, it can be.
Yeah.
They have to write a business plan, financials, and so forth, and it can be a big job and can take months to put that together. With the SBA Registry, the franchises have already been through that process.
Yeah, we don't have to, as long as it's on that list, we
Right.
don't have to go through the process of getting that franchisor approved by the SBA.
Correct. And they have to submit pro formas with some financial information, projections, but the whole comprehensive business plan does not have to be submitted, so it can fast track this. SBA Express, the 7A is about 30 to 45 days. So it's a much quicker process than it would be otherwise.
Well, just as a word of disclosure, it's just not the franchise agreement that has to get underwritten. That certainly helps the process, knowing that the franchise agreement has been approved by SBA.
And your bank, I think you told me you're a preferred lender for
Yes.
SBA, which that's the type of banks and institutions that I refer my clients to,
Right.
because you know what you're doing.
Right.
You've done them before, and I would highly recommend your bank for that. There are requirements for you to underwrite. You have to have a credit score of typically 680 or greater. No recent bankruptcies, and you're going to check out that potential franchisee yourself, because your bank is going to guarantee a portion of that loan.
Sure.
The SBA guarantees 80%, you guarantee 20%. So you want to make sure you're lending to someone who's going to be able to pay that
It's
back.
actually 75-25 for the loans we deal with.
Is it?
Yeah. Unless it's an export business, and then we sometimes can get a 90% guarantee.
Okay.
So,
Excellent.
but you're right. We and so we'll underwrite it just like a regular loan, and but we gain comfort if it's associated with a good franchise.
And in your case, and in my case as well, I often have, and probably listeners out here who are listening that say, well, I don't, I've got to have, to open up a franchise, I have to have $500,000, and I have to have it in my checkbook. And nothing could be further from the truth. With an SBA loan, for, the $150,000 loan, they have to have 10% liquid, but it doesn't even have to be invested necessarily in the business. They just have to show that they have it, in addition to meeting the underwriting criteria. So that's just one option, and of course the loan amounts can go higher. And I often have clients, I ask them, what do you think it would cost to go into a franchise? And typically they'll say, oh, it's going to be $300,000 to $1 million. And that's not accurate. I have clients, I just talked with one yesterday. He invested $75,000 in a business 3 years ago, and he's doing $1.4 million in revenue today.
That's not a bad investment.
Not bad at all, at a 50% gross.
Well, the franchise fee is usually not the biggest expense.
Correct.
It's all the other expenses associated with getting into the business.
It is. And in that individual's case I referred to, his business is home-based. So he doesn't have the furniture, fixtures, equipment, leased hold improvements, leased deposits, all those expenses. So that's why his investment is so much less. When you go into a brick and mortar retail, you are going to incur a higher cost because of the furniture, fixtures, equipment, and so forth. And the downside to, in my view, I've placed very few clients in retail locations. I probably would say I've placed 70 clients in businesses over the past 5.5 years. And I would say less than 10% ever signed a lease. And of the ones that signed leases, they weren't retail leases, except for one client. The trouble with the retail, in my view, is a couple things. One, retail hours are not great. You're working 7 days a week, and you're dealing with a lot of employees, and it's hard to get away from the business. The investment is higher. And if you get in the wrong location, you just can't pick it up and move it.
You're dead.
You're stuck.
Right.
So I like businesses that have a great deal more flexibility and don't require the risk that a lease requires, because you're also on the lease. If the business, heaven forbid, fails after 2 years, you're on that lease for 5 years.
And by the way, not only are you on the lease, but you're also personally on the hook for any tenant improvements that the landlord may have done on your behalf.
That's right. So I'm not saying I don't ever direct clients to retail, but what most people think of franchise as being retail and or food, I just haven't placed. I just don't direct my clients that way. Food is a whole nother challenge. It can be very trendy and up and down. They're really hot now, and then in 2 years or 3 years, the next fad comes along, and it becomes antiquated.
Yeah, we are very, very careful with financing food type businesses. Well, it would seem to me that the entrepreneur spirit is a little bit in contrast to the requirements of owning a franchise. So how do you reconcile all that?
Well, I consider myself, and I've been called a serial entrepreneur. I've started 4 businesses and successfully run all of those. For me, it doesn't inhibit me as an entrepreneur. It complements me. I feel like the benefits that I receive of being part of a franchise organization far outweigh what limited restrictions I have on myself. So for example, in my practice, I'm able to express my creativity in the way I conduct myself in my business as a coach, as an alternative career coach, because I am a franchisee for the Entrepreneur Source. Where I wouldn't have the ability to do that would be owning just going to use a name, Subway sandwich, or for that matter, a Chick-fil-A.
Right.
They have it's very specific. On a Subway, you put X number of ounces of meat, so many slices of cheese, this much lettuce, tomato. It's very, very formulaic, and that for someone who became a franchisee that wanted to be creative or an individual, that's the wrong business for them to be in.
Right.
But of the businesses that I've been a part of, the 2 that I've been part of as franchises, I've never felt inhibited at all. I felt very
supported.
Free. I felt supported. Yeah, that's not perfect. There hasn't been without some bumps in the road, but there's nothing that would cause me to want to throw in the towel and say, forget it. I'm walking away from this thing. That's not been the case at all.
Right. Now, what about someone who has a business and decides, you know what, I'm going to franchise? Have you been involved in any of those discussions?
I've been involved in the discussions. I've not been involved in actually bringing someone through that process. So here's the key if there are listeners that are interested in doing that. One, remember you've got 4,000 to 5,000 franchises that are already out there, and there's likely someone who's already doing that. So look at what they're doing and how successful they are with franchising their business. Number 2, make certain that you have locations that are already profitable and successful that you can point to, because when someone looks at a franchise, like myself included, any business I invest in, I look at, I want to see if it's going to provide me an ROI, a return on my investment of my time and my money.
Sure.
So I've got people that I know that they'll have one location, and it's doing okay, but they say it's a great idea. Let's franchise it. Well, show me something that give me something that has 5 locations at least or more, and show me that they've been successful, then I feel like there's a greater possibility that I can point to someone and say, okay, look at what they've done. But also be mindful that with the regulation, with the requirement of the Federal Trade Commission, the FDD, that's an expensive proposition.
I bet it is, collecting all that data.
But then writing the agreement, having
designing
attorneys,
the product,
and then having someone to market it. You know, the franchise fee, part of it is that the franchise fee that one pays is, part of it is the intellectual property, but part of it is marketing, the marketing costs for getting the word out and having developers who can then sell the franchises. I'm invested in a company, a company, and they are interested in opening up retail locations.
Mm-hmm.
And I advised the president of the company earlier this year. I love the idea of it, for it to become a franchise, but open a couple first and then prove that they work. And that's what they're doing. They're opening their first location in Atlanta next year.
Mm-hmm.
And I'm hopeful that they'll be successful and they'll be a competitor to Starbucks out there that I'll be an investor in.
Sure. Do you let's talk about some of the stuff that's probably in the agreement that people need to be careful with. From a hotel standpoint, you've got to be careful with the changing appearance requirements of the brand.
Yes.
Those can be expensive. And I guess the franchisor, through the agreement, would have the right to change the appearance, the way the product is marketed. They pretty much have full control over how to market that product. Is that correct?
I don't work in the hotel space much. We did years ago, but we don't at this point. I would say yes, that there are for example with Marriott, we talked to them about them earlier. They've got very high standards for they call it refreshing their hotels, refreshing their properties. They want to maintain PIPs. So they have to make sure that they maintain high standards to be a Marriott property. So once again, that goes back to, hotel is a brick and mortar operation.
Sure.
And that's one of the reasons that I'm not as familiar with those requirements for those types of businesses, because my clients aren't in that space typically. But
right.
there are certain requirements with some of the companies that we represent, frozen yogurt, ice cream, food, that do require that, even some retail operations.
Now, do you build a reserve for that? Do you recommend building a reserve for those unseen potential changes that could come down the pike? I
think you have to, and then the franchisor might require that, unless they go to your bank and get the financing to be able to do it. They're going to have some reserves established to do that in the future. That's just part of your operating expense of the business, is setting reserves aside. But
obviously, read the agreement, start to finish.
Absolutely, and I have a client just this week who asked me. He's opening up a business we represent called College Hunks Hauling Junk. Really interesting.
I've seen the trucks, I think.
Yes, he's opening one over here in this area. So he had asked me, should I have an attorney review the agreement? And I tell him, I can't tell you what to do, but I would say half my clients do and half my clients don't. So I would advise them to read the agreement. Most of my clients are pretty sophisticated. They know the majority of what's in there. But when you're reviewing a franchise agreement, because of the regulation, the franchisor can't cut deals. They can't do one thing for Joe and one thing for Steve and one thing for Mike. It has to be pretty consistent.
Right.
There is some negotiating room when it comes to territory and potential rights of future rights of future territory, or they might provide you the option to acquire an adjoining territory before it's sold to someone else, as long as that franchisee is performing. In terms of the general agreement, if there's something that my client is not comfortable with signing, and in one case I recall it was contradicting a different part of the agreement that the attorney just didn't notice and hadn't caught it before, but my client did, then they struck that or they changed that if it's justified. But one has to just understand, when you have an agreement reviewed by an attorney, make sure that it's a franchise attorney that's doing the review, because they're going to understand franchise law and what they can and cannot do. The main purpose of having a franchise reviewed is to advise my client of so that they know what they're signing, not so much to redline it and change it.
The concept of master franchisee. For example, I know here in town the Arby's are all owned by a big master franchisee who then sub-franchises from that.
Right.
So how does that work? How would that have come to being?
Those are typically an exception. I'll give you an example of one. Most listeners have heard of probably ServPro.
Yeah.
They do remediation services, insurance restoration and remediation services.
Boy, that's got to be a tough business.
It is.
24/7, I would think.
So we're in Atlanta, so they had a master franchisee. They had a master franchisee who developed this area, and he, for example, sold an entire county, or bought an entire county. And then he just recently divided that up into about 8 territories. So that's what a master does. Now, there's another company we represent that I just placed a client with this down on the west coast of Florida. He bought everything from Tampa all the way down through Naples, and he's going to divide that up into probably 6 territories down there. That master franchisee will be entitled to a portion of the franchise fee that those 6 franchises that he brings under him are going to bring. And then he'll also be entitled to future percentage of the royalties that are created in that area. He has to provide support. They don't just hand that to him. He has to provide support, training, and so forth for the franchisees that are in that area. I think one of the main reasons...
Did he write that master franchise agreement, or the franchisor write it for him?
The franchisor wrote it for him.
But they had to give their approval for him to be a master franchisee.
That's correct.
Okay.
And he invested about $250,000 in that business. He'll recoup all of that in the future franchise fees plus future royalties, where he'll get potentially a very handsome return on his investment.
Did he have a franchise with this company before?
No.
Okay.
He did not.
So he's going to have to run his own, plus help everybody else.
Which he's doing. So
Okay.
he's got 2 territories he's running right now, and he's got 2 other franchisees that he's brought in, one of which bought 2. I have another client who bought a part of the territory from him. He acquired 2 territories, and I think he's got 1 more, maybe 2 that have acquired 1 or 2 more. So of the 6 he has, he just acquired this last fall. He's already placed 5 territories.
Wow!
So he's done well. It's I think the reason that the franchisor in that case decided to do a limited number of masters is it gave them working capital to really expand their business. So in those master franchises, I think they did 6. Well, they brought in about $1.5 million.
Mm-hmm.
So that gives them a tremendous amount of a head start with working capital to get the business to sell the rest of the territories across the country by having the working capital from those first masters.
This is Steve Miller. We're talking about franchising, and the eyes are wide open when you go into this. Now, how long did it take you? We've only got a couple more minutes, but how long did it take you to find Entrepreneur Source? Tell me about your due diligence period.
I didn't find it. It found me.
Okay.
So I was in franchise development for a company here in Atlanta, a company called Norrell Healthcare,
Right.
Years ago. And then I bought a franchise, and then I sold that franchise, and I was looking for my next thing. And it was an act of God. There was a guy I know in Texas who introduced me to a guy here in Atlanta who had just acquired that franchise, the Entrepreneur Source. He had just received an offer from a Canadian bank to run an offshore insurance division in Barbados. He accepted that. So the business was dormant. He had acquired it maybe 3 or 4 months previously, and then he shelved it, and it was available. So I began to work it, and I just loved it. So I worked it for a short time and then acquired the franchise from him. So I was in a unique position to be able to try it before I bought it.
Oh, good. Okay.
Which is unusual.
Mm-hmm.
But I also would advise clients that, and I always ask them when they go into when they go through the process and they've decided on the business that they want, that they go through a very thorough discovery process with me walking them through it to determine, is that the best idea for them? And part of that includes spending a day or 2 with other franchisees.
Learning the business a little bit.
Learning the business, shadowing them, really learning what it's about. Then do what's called a discovery day. And a discovery day is when it's typically one of the final steps in the process. You're invited to go to the corporate offices of the franchisee, or franchisor rather, sit down across the table from them, look them in the eye and determine whether or not they can do business with them, but also experience, all right, what kind of support have they? Usually the franchisors will bring their support team in to talk with the prospective franchisees, explain what they do, the support they're going to receive. It's not the acquisition of a franchise is not an event, it's a process. And the goal when I take my clients through this process is I want them to obtain as much information as they can possibly obtain so they can make the most intelligent decision about whether to go into a franchise business at all, and if so, which one. And the biggest advantage to my client, and I didn't have that. When I acquired TES, I didn't have that. I didn't have a coach. I did it on my own. I can't imagine what it would be like to go to these websites and try to figure it out on my own. It would be overwhelming and
mind-numbing.
And what a lot of people do when they get to me is they said, they've been doing this for weeks or months, and they're getting inundated with information. And
what's good? What's bad?
They throw in the towel.
Yeah.
So what I do is through my experience of better part of 20 years in franchises, one aspect or another, I navigate them through that process. But there's no cost to the client. Now, here's the beauty of my engagement with them. When I introduce a client to a business that they end up being awarded and move forward with, that company, in one case College Hunks Hauling Junk, provides the entrepreneur source a placement fee for making that introduction, and that's how I'm compensated.
Wow.
So it's never a cost to the client. And I always tell them it's never an obligation. If they decide now isn't the right time, there's a good chance in 2.5 years, according to the Department of Labor, they're going to be out of work again.
Right.
And they're going to be back. And I've had clients say, hey, you remember that conversation we had about a business? Let's revisit that conversation. Or about 80% of what I do now is referral.
Okay. So
people that I have or have worked with in the past, whether I've found a business for them or not, will refer people to me. And that's what I love is those referrals.
Well, listen, we've hit the end of our slot here, but Steve, it's really been interesting talking about this. I think what we need to do is, Mike, put him on the slot for about 6 weeks or so from now so we can get you back in, because I want to get back more into what you may do on the front end to help a client understand what might be best for them, because that would be very confusing to try to walk through. But we'll get there. Listen, Steve, tell them your number and how to get in touch with you.
You can reach me by phone. I'm glad to take calls at 404-787-5897. My email address is smiller@esourcecoach.com, and I'm on LinkedIn as well.
And you got to tell everybody what your Twitter handle is.
Fly like an eagle.
One. Right.
Yes.
At Fly like an eagle 1. So anyway, thanks so much, Steve. I think this is for someone listening in. Everybody that wants to look at a franchise needs to hear this particular show, and I appreciate you being with us today. So that's our show for the day. This has been On the Money, the _1 small business show on Business Radio X. On the Money is presented by Embassy National Bank. Follow us on Twitter at @on_the_money and then the #1. And you can listen to any of our shows anytime visiting onthemoney.businessradiox.com. We do have a, not audio, but video component at Business Radio X Gwinnett YouTube channel. Last week we didn't catch that, or 2 weeks ago, but we do have this one out there. So please go visit. Sometimes it's just better to watch and hear at the same time. So until next time, I'm Joe Moss with Embassy National Bank. And remember, be careful out there. By the way, there's 4,000 different opportunities in franchising you can get involved with. Leave fear in the back seat and stay authentic. And if you want to get into franchising, call Steve first, so you don't make a mistake right up front. So that's our show for today, and we will see you next time.